So you've heard about Bitcoin and it works with blockchain, but do you know about Ethereum? And have you considered decentralization? How about DAOs in your data, DeFi, open source software, crypto Twitter, E2.0, Mt. Gox stacks, sidechains, state channels, consensus mechanisms? Welcome to Square One, a place to deepen your crypto knowledge. Hey everybody, thanks for tuning in for another week of the Square One podcast series. This week we talk to Sid Powell and Kerman Coley about all things DeFi. So I recently joined Sid's project Maple Finance as a product manager, and as I was discussing and describing, what the podcast series was about, he suggested that we get on a call with himself as well as Kerman, who is also an Australian DeFi entrepreneur, and both Sid and Kerman have sort of frequent syncs and calls, brainstorming and bouncing ideas around about this new, really exciting space. And it was good to get them both in the same room and sort of have a discussion. It's relatively unique to have, I don't know, I guess like multiple people talking about this space with such deep context. There's only so many people in the world that have that context. And so anyway, we have a pretty lively discussion about all things DeFi and decentralized finance, what that means to us, and what future implications that holds, both positive and potentially negative. So without further ado, I hope you enjoy the show.
Hey everybody, what's up? Welcome to another episode of the Square One podcast. Here I have Sid Powell and Kerman Coley. Coley? Oh man, I do this every time. I literally just talked about this. Coley. Literally, I just asked. Oh wow. Anyway,
You're good.
Kerman Coley, glad to have you both here, and thanks for joining me. I'm excited to kind of dig into all things sort of DeFi and also crypto with both of you. Sid, we know each other because we work together, and we're both part of Maple Finance, which I'm really excited about and have recently joined. And Kerman, I know that you're another Australian crypto entrepreneur building a stable coin system. I'm pretty sure is what ArcX is. But yeah, would you both want to just like begin with some quick backgrounds?
Yeah, sure. I might pass over to Kerman to kick that one off.
Sure, all right.
Dogged in.
All right. Yeah. So let's see. I, in my previous life, was a mobile developer. I started making apps at a fairly young-ish age. And I released this one app when as early on in my career, and it got 50 downloads in the first day. And I said, all right, should probably spend some more time working on this. And fast forward 5 years, I got to a point where I got about 500,000 downloads a year organically, and hit about 100,000 students using it every month. And it was just like this experience of here's how you make something nice that is engineered well with the nice design, marketed, all the growth loops and the pricing marketing models. So that was great. And then 2008 worked as an iOS engineer at a couple of companies. 2018 did one of the first DeFi startups at the time. It was called 8x. It was an on-chain recurring payments protocol. I was basically there as DeFi was like this new meme. So DeFi was comprised of DYDX. DYDX, Set, Dharma, and Wallet Connect. They're the initial DeFi founding fathers. And then went out to San Francisco in September that year, and there was the first ever DeFi meetup, which was absolutely just insane looking back, being at that place that time. So anyway, 8x didn't really work out after 1.5 years. So worked at Gods Unchained and Zora before starting Arc. So I've worked in quite a lot of areas of the industry, met quite a lot of people, and throughout that time, I've also been writing about as the industry's been progressing through my newsletter called DeFi Weekly, which I also make YouTube videos for to explain complex topics and the whole idea is like being an engineer who I think can communicate somewhat okay. I can help break down topics that are hard to understand for normal people, because that's something I used to struggle with coming into the industry. So that's my background.
Yeah, awesome. So my background, not quite as exciting, but I came from traditional finance space. So I used to work in banking, doing like mortgage, asset-backed securities. So institutional banking, helping lending companies to grow basically. And so I did that for a while, and then I got, I could see the writing on the wall that I was going to be doing the same thing for a number of years. And so I decided that I actually wanted to be more on the builder side. So I went and joined a company that needed the solution we were providing. So I joined a commercial lending fintech that was growing pretty fast to set up their own bond funding program so that they could expand. And it was in doing that I kind of encountered the pain points of doing that in traditional finance, fees, third parties. And I started to learn more about Ethereum and think about, is there a way we could make programmable bonds or programmable debt using smart contracts? And so that was the initial idea with Maple. And anyway, that was back in mid 2018. And so then I started grinding away at it for 2019, wrote a white paper. Then fast forward to last year, DeFi started to take off, and then I was able to to transition and go to work on Maple full time, and build out the team, add fantastic people like yourself, JD.
Mm-hmm. Epic. That's awesome. And no, I mean, even if it's not as exciting from a software developer perspective, I think, Sid, like the thing that I find to be unique, in your background is that you're a non-technical founder in a space that is riddled with just like nerd founders. That's pretty much what that's the norm. You know what I mean?
Yeah.
And so to be able to wedge yourself in there, I mean, you're a bit of a unicorn for that reason. I think it's cool.
Yeah. Well, it is funny. Like I did get a lot of pushback early on from like conversations with investors and VCs that I didn't have the technical background to be doing this. But
right.
I think what you get when you don't have a technical background and maybe you come from more of a, let's say, finance or other background, operational expertise and just like managing teams and coordinating people is such an underrated skill for just getting shit done. Like, do you come out of meetings with action items? Like, do you know how to follow people up? Do you know where to go to try and find the solutions for things? Like, those aren't technical skills, right?
Mm-hmm. No, absolutely. It's the coordination, and it's definitely something that can often lack in a decentralized, like, global little ecosystem of people coordinating via Telegram and Discord.
Yeah,
and like ad hoc Zoom calls.
Yeah. But I take it as a mark of how much the space is maturing now, that you're getting more people who have a non-technical background coming in and trying to find jobs or start projects in the space. Like I'm definitely seeing more founders that I'm talking to who are non-technical themselves, and maybe they had a great idea and they were in the financial services industry, and they're now able to pull together a team of technical people to hire for the skills they lack, but they bring a kind of product vision that is maybe a little bit more sophisticated because they've spent that time in IB. Like in Maple, for example, we've now hired more non-technical roles. You've got marketing, you've got operations management, you've got HR and recruiting. So yeah, I think it's awesome that the space has evolved to the point where we can have non-technical people entering.
Yeah, no, I totally agree, and it's fun to see that continue to become more robust, and for the space to mature in a lot of ways and take a lot of the lessons learned from corporate institutions and actually apply them to create more efficient organizational structures, which is relatively necessary in order to ship things in general. But I would like to kind of dig into a few specific topics, or I guess like broader topics, and kind of get your all's opinion and sentiment of specifically decentralized finance. So this is something I haven't yet really delved into to much extent on the pod. I think thus far it's been literally, we've talked about the history of money, where money came from, with Andy Tudhope. I don't know if you all are familiar with him, but he's like a bit of a philosopher, nomadic, crypto folk who, there are many. but he's a particularly insightful one, wise one. And then also I've talked to a few people who have like been developers, like building DAOs. But we haven't really talked about DeFi specifically. And I guess like I'd love to just start with an overview of like, what do you all, what is decentralized finance and why is that, where is its place within the blockchain ecosystem today?
Of course. Sid, you want to go or?
Kerman, you want to go ahead actually? Or yeah, Sid, are you feeling? Yeah, anyway.
I'm happy to go first. I think what most excites me about DeFi is it's the fact that it's globalized in nature. So we can now apply scale to capital formation. And I always approach DeFi from the perspective of, I think about it as capital formation and capital flows around the world. And that comes from like, I've always had an interest in history and how institutions and organizations work. And so they're powerfully impacted by the availability of capital, ultimately capital funds, innovation, capital funds, social development, capital funds, growth. And so I've always thought of it more at DeFi as kind of a macro level in the framing of capital flows rather than, sort of the next interesting product, which might, maybe be like a set of features, like a self-repaying loan or something. And so what I think is really, really important about DeFi is that one, it's global, so you instantly have those kind of scale advantages. Two, it's programmable, and programmability solves some of the problems of trust and coordination in that somebody on one side of the world is comfortable putting money in a protocol that was developed on the other side of the world because they can see how the smart contract code works, and they can form expectations of what's going to happen because they can just verify it in the GitHub repo. So I think that programmability helps facilitate the movement of capital around the world and where it can be directed to where it can do the most good. So the lens that I look at DeFi through is it's a new set of infrastructure where innovators can build can build the future of financial products, and you have people who are doing fantastic things in finance and technology who can then access capital through this system, and that capital can then progress development in a much larger way. Energy companies, infrastructure, things broader than just financial engineering.
Indeed, yeah. I'll add to that the way I think about DeFi is that like it's essentially like financial services available to anyone everywhere on the planet. And like when we think about high level, the main buckets, you've got trading, leverage, or like then you've got lending and asset management. And like traditionally you have like these very large firms in each country all around the world kind of doing the same thing in an opaque, slow, discriminatory, corrupt way. And really we can say, actually, let's just cut all that and replace a 2,000 person bank with 2,000 lines of code. And like that's the way that I love to think about DeFi, that we can basically replace like thousands of bankers with like a few engineers. And it's like, this is the future that we should be living in, rather than like a corrupt kind of system where if you steal $1 billion, it's like a fault of the system. But if you steal $1 million, you're a criminal. So I think DeFi is more of like, I like to view it as more of like a rebellion on the system. Whenever I see a massive bank building, I just can't help to think about to myself that you guys are going to be replaced by like just lines of code top to bottom.
And I don't feel that bad about that as a reformed banker, but I like just building on that. Like I think what you've seen is that I would say in finance we're kind of at almost like the guild stage, if you look back historically, where you used to have all these kind of crafts and trades and professions, but they were really controlled by guilds, and it made them hugely inefficient. And that's kind of where banking and finance is at the moment. And DeFi is a way to introduce competition and efficiency back there. The best protocols will win, the most nimble, most agile teams will win, and those that best serve the customer's needs, right?
Exactly. No, absolutely. I mean, I think that's really like both sentiments here that make a ton of sense to me. And I think the thing that is hard to some extent, and the thing that I find most valuable about DeFi is it's kind of like the foundational layer of like what is to come with Ethereum and blockchain and cryptocurrency, et cetera. Like to me, it's like you really need that before we get to full like smart city infrastructure and tokenized real estate and everything else needs this like financial layer, which is actually it's funny because my initial feeling about DeFi was like it wasn't as interesting to me as like DAOs, and like frankly it was just like to me the thing that was most interesting about these like global coordination systems was coordinating humans, right? And like allowing for like this democratic voice, but realistically, that's also what DeFi, does, and it does so in a clearly I'm working, at a DeFi company now, right? I mean, in a lot of ways, I think it's kind of the first step toward a more like more efficient and more robust systems, within the ecosystem.
I think that's interesting. Like, DAOs as coordination become a lot more interesting when you have things that can coordinate. And what DeFi does, and blockchain technology more generally, is it gives them vast control over vast resources to coordinate. So you already had coordination mechanisms that were remote across the world. Like look at CS:GO tournaments and like World of Warcraft raids and stuff, which are kind of similar techniques to running a DAO. But it starts to get a lot more interesting when you have a DAO that has a $500 million treasury and they need to coordinate that. Like that's where it gets really interesting.
Great. And yeah, I think speaking of that, we're reaching a point and I don't want to take this too off topic, but like where DeFi is now starting to intersect with many other areas such as DAOs and Web3 and identity and reputation and NFTs. And it's like the culmination of many crypto native primitives. But and yeah, as Sid said, like capital allocation for DAOs is extremely interesting because these networks start off making a product, but then they essentially become the new institutions. But we'll park that there because it's going to derail the conversation.
Yeah, no, that's fair. No, but I kind of like where we're going there because I mean, so essentially, like I think like you said, like Kerman, the DeFi kind of breaks down into a few simple, or more or less. There's only so much space you can, so many things. The design space is relatively confined to exchanges, lending, and variations of those two things, more or less, right? Like within DeFi, like lending being like debt, and also like derivatives or futures, right?
Yeah, I think you're right.
Would that be right? Like exchanges and lending, or do you all see anything else?
Asset management.
Yeah. Asset management's pretty key one.
What would you describe? What is asset management?
Yearn.
Right.
Yeah.
Yes.
Yearn.
Okay.
Hedge.
Got it.
What was the other one? I mean, you
had
set
like
like Enzyme, which used to be like Melon.
Right.
But it's effectively the pooling of capital to apply it towards earning a return, whether it be through any number of different asset classes, right?
That makes sense.
Venture DAOs as well.
Sure. Democratic funding and fund management systems that optimize yield or optimize your investment, your opportunity there. That makes sense. Okay. Yes. So exchanges, lending and asset management, essentially covers
derivatives as well.
And derivatives covers DeFi. Yeah. Okay. That's fair. Yeah. And I don't know. I think that like it's easy for someone to get overwhelmed with all of the concepts within this space, like very quickly. But if you kind of can like confine it to those, it's like, okay, it makes somewhat, some sense. Right. And then I guess like, I don't know, jumping back to a little bit of where you left off, Kerman, like, I'm curious, to some extent, these are, similar patterns of what you see in the traditional world. And in some ways that feels contradictory to the mission of like blockchain as a movement, right? In some ways, right? Like the point is to have this revolutionary kind of anti sort of hierarchical system, or as much as you can, which I kind of believe hierarchy is embedded for a reason, and is impossible to get away from. If you think flat hierarchies are great, well, try and join an organization that has one.
We don't believe in titles.
That's right. Yeah, we don't believe in titles. That's right. Those kinds of things. It's like, I understand that to an extent, and I used to be that, like, of that sentiment in some ways, but I've learned some things, I guess. But I guess, like, to bring it back, like, to what extent should we be modeling ourselves after traditional finance versus innovating and sort of creating a new, like, playing ground? And is it bad or something to model after traditional financial systems? You know what I mean?
So this is something I think about, like, before I go to bed.
That's great.
It's like, when Mark Zuckerberg was creating Facebook, he's like, hey, here's a way for me to keep tabs on people and for other people to keep tabs on other people. And it's like, oh, this is a cute tool. And, like, fast forward 20 years, it's basically the demise of political systems. And, like, with DeFi, one trend that we're going to start seeing more, so, like, crypto is like these set of fundamental ideals where it's like, don't trust anyone because everyone is bad, and the only thing you should trust is code, and people are bad. Like, it's kind of like this general sentiment, right? Like, and DeFi has started off in that direction that, like, people are bad, everything should be trust minimized, decentralized, etc. But at some point you start running into limitations. And, like, what people are starting to say is, actually, let's kind of put a bit of these ideals on the side so we can introduce greater efficiencies in the system. Because at the end of the day, we care about making money more than we care about ideals. And, like, what we're seeing right now in DeFi, the next wave, is an ideological war between, like, here's the ethos of crypto and, like, here's how to make more money. And, like, Ethereum DeFi versus Binance Smart Chain DeFi is the perfect example of this, right? It's like, just, I want to make money, I want to yield farm, and I don't want to pay much. I don't care if, like, CZ is all the validators in the network. Just, like, sign me up for the money. And, like, I think we're going more in this direction of, like, we're trading off decentralization for efficiency. And I expect that trend to carry over. But, like, when I think from, like, a decade's perspective, like, okay, we start off as an industry like, oh, like, here's fun permissionless finance for everyone. But really, is there a probability that in 20 years from now, we kind of end up in a Facebook situation where we now need a new wave of technology to disrupt the previous wave because of the problems that we created? And I don't have any answers for it yet, but that's something that I think is worth thinking about.
I think that's I mean, I think that's critically important, and it's impossible to say, right? Like, to what extent, this is something that I've, to what extent can you even prevent a Facebook type, dystopic scenario? I think in some ways, all technology comes with kind of positive and negative, implications, and it's not up to the creator to decide those to some extent of the technology. It's like, it is a bit of a consequence of the behavior of that technology and the mass population. I don't know, Sid, what do you think? Do you have thoughts?
I think, like, if the question is to what extent should DeFi be innovating away from traditional finance and traditional financial institutions, like, it's kind of the same. It's kind of the same evolution that, let's say, if you apply the lens of retail, right? You had initially sort of supermarkets, like, A&P. Then you had Walmart created the big box framework, and then that was a new paradigm of kind of retail. And then Amazon shifted that again with a new distribution layer, which was online. And so the banks have had this sort of, banks and other financial institutions have had this kind of legacy distribution layer. And now it's actually a new kind of paradigm in infrastructure, which is blockchain, which enables us to bring kind of new models to it. And so there are kind of new conventions that are going to emerge that are, built off the implicit properties of, blockchain, where you can have trustlessness. It is inherently global. And then, you can program features into financial products. And so I think I think that those characteristics of the infrastructure that we're all using, which is Ethereum and other blockchains, mean that we would be foolish to just try and slavishly recreate the old financial institutions. We have to lean into what we can do with those new features and those new tools. And so I think absolutely we should be innovating. It's going to have some characteristics of the old system because there are certain primitives that are going to persist. But by and large, we should look to be as innovative as possible. It should look as different from traditional finance as e-commerce does from going to a store.
Brick and mortar. Yeah, I like that. I think that makes a lot of sense. I do see it. I know we all see this as like an evolutionary layer of sort of asset management and global asset management, global digital asset management, right, and value transfer. And it's the evolution of currency and the way that we essentially share trust as humans, right? And we're able to do it now on a scale that supersede or transcends more any specific political or government that's been established previously, right? It's in some ways that I think that's very profound, but I also think that there's a lot of like room for misinformation, right? Like that's like the negative side of it is like you have this like profound like opportunity to create this global infrastructure, and it's forkable, and anyone can also like have that same opportunity to act like they're creating a similar infrastructure. I think just
riffing on that, I think one of the important differences is how people approach kind of people of Gen Z and millennials approach the idea of financial freedom. So the use of DeFi protocols is pretty implicitly tied now to the ownership of DeFi protocols. Like you're generally going to own the tokens of the ones that you use the most, and that's you have ownership of financial assets, I guess. And I think this generation looks at the boomers and can see that most of the wealth transfer was through the mechanism of property, like inflation of property prices, whereas there's this new kind of secular shift that all of us who use DeFi are bought into, that the new sort of secular transfer of wealth is going to be the expansion of the value of crypto assets. And so we're all both participating and owning parts of these protocols. And so like a much, much higher degree of financial literacy and also interest in owning financial assets rather than real assets like homes and cars and things is going to be characteristic of this new generation, I think.
Absolutely. Yeah, I like that. I think that makes sense. And you mean that they'll be owning more digital like financial assets rather than homes or cars?
Yeah, it was like if financially savvy people before wanted to, own a house and like save up for a house and then have like a kind of stock portfolio that maybe buy a nice car. Now what they want ownership of protocols that are going to be much more valuable in future. And you'd rather rent a house because it's a financial asset. Yeah, it's you want to be capital light on, rent a house, rent a car.
Yeah. Illiquid assets are less appealing, right? In a market that has highly volatile liquid assets.
Mobile capital is, mobile capital commands a premium.
Yeah, and the sophistication of how you can use these tools to like finance your own portfolio is really interesting. So like the traditional boomer play is like, get enough money for your first down payment for your first home, then hope that appreciates in value, then borrow money into that to buy your next property and play the loop. Our version is like start with a small stack of crypto, wait for it to like effectively 10x, then borrow against it and go into riskier stuff. Hope the riskier stuff appreciates, borrow against that to buy more stuff. And it's like, sweet. Like this just happens like in a few clicks, and like about the same kind of sophistication is like literally the most powerful institutions in the world, all the way like just in a few interesting interfaces. Like get some token, earn yield on it. While the token's earning yield, borrow against it to offset your borrowing costs while keeping the capital appreciation, and then using the debt to do something else. It's just like, this is like the kind of stuff that only the most elite hedge fund managers have access to. And I was like, yeah, just go into like urine cream and this, and you're good to go.
Yeah. Because it's like, I mean, financial engineering as kind of a profession began, before all of us were born, who are participating in the crypto space now. So we're kind of, we're natively comfortable with the idea of like financial engineering and sort of complex financial products. But that kind of boomer paradigm of save up and own a house made sense when you had people who were in jobs that would persist for 20 plus years. Whereas now the life cycle of the average job is much, much shorter. So it makes more sense to actually build the bedrock of your financial security on liquid assets that are global by nature, right? Rather than a big 30-year mortgage.
Right.
I know.
Yeah. It's wild.
Yeah. And I always like to think about like, there's no free lunch in life, right? And it's like, where does the information asymmetry lie here? And the fact that you know about this industry and like how the intersection of these two is happening, that's a much more specialized piece of knowledge compared to like, I'm going to save up and buy a house and wait and pray that it doubles in 5 years. Like, there is a lot less sophistication in that thought process than like trying to navigate your DeFi portfolios. I would assume that the rewards accrue appropriately.
It's really interesting. Yeah. And that's a really great point. That's really, although it is open to everyone, right? Like it's open to anyone with internet access, DeFi. The barrier to entry is that like that sophistication, that learning curve to actually feel comfortable. Okay, here's my new bank account. Here's like where I'm going to place most of my bet on my future worth, right? And the people that are doing that, I mean, you have to have like a high level of risk to kind of be able to like do that. And also like curiosity and like interest. Like I think most people are just like really deeply fascinated by the technology that's being built here and the potential implications of it. And that's kind of, to me, what really drives both innovation on the UX and the feature front, but also on the on like the wealth creation and the people who are getting involved. I mean, it's really crazy. I was looking at stats on this bull run, and it's been right. We've everyone's hit all-time highs, right? Like, or surpassed, like 2x'd it. And I'm looking at DAUs or daily active wallets in DeFi, and it's still 100,000 DAU. And I'm like, wait. So all of that wealth has been pretty much cornered by Coinbase and Binance, and nobody has learned about decentralized finance yet. Like, no one has learned about this yet. No one who's just entered the space. So this is just the same people that learned about it in 2017 and participated in the bear market. Like, the bear market DAU was also 100,000 people, right? 100,000 unique wallets based on DApp Radar and state of the dApps. And so it's just like, that's the thing that's quite mind-boggling to me, is that, okay, people are onboarding into crypto, but they're not yet in DeFi and like participating in these rewards. Like they'd rather just continue to earn on Coinbase, or there's another like custodial, whatever custodial option there is that's easiest. Similar to like Binance, like you were describing, Kerman. And so that, to me, that's like, it's kind of like this bridge or this like middle path between that full decentralized idealist and like the corporate, hierarchical like system that we're a part of today, right? It's like this weird transitionary state.
And those people are using products like crypto.com, instead of setting up Metamask and going and yield farming themselves, they're earning a much lower rate, through the native deposits in those apps. I would be interested though, because I think I heard a stat this morning about MetaMask having now surpassed 5 million monthly active users. So I would be interested if we just zoomed out on the granularity of the usage, how much that has expanded from where it was maybe a year or two ago. Because you might have people who are sort of using it like infrequently. Maybe they've done a little bit of yield farming. Yeah, like whether that subset has expanded a lot. I suspect it probably has.
Yeah, I would imagine the frequency of use and the like the frequency of use surely is picked up.
Yeah.
I mean, if it hasn't in this bowl, like I would be surprised.
Yeah.
It's
you go, Kevin.
I'll go for it. Nah, it's cool.
I was gonna say I'm interested in where kind of DeFi fits in, you know, the kind of the secular trends that people point out in you know, sort of the hollowing out of the middle class in sort of more developed economies, like whether it actually isn't going to be an accelerating factor in that it promotes sort of outsized returns if people have a high degree of sophistication, and it's kind of, you know, global in nature. So you're no longer kind of competing with somebody in your own state or city for wealth. You're competing now with everyone around the globe. Like you're part of the I don't want to say global casino.
Right. I don't know, the way I like to think about that is that I don't think that will be such a problem. And the reason why I say that is because, like, I now view crypto as like a hydra. And like the hydra is start off with like Bitcoin as the first head, Ethereum is the second head, and DeFi is the third head. And like each head becomes more and more powerful and bigger. And like kind of you can bring like the thing which I think has been very deeply fascinating to me being in DeFi is that the more of a zero-sum DeFi protocol you are, the less returns you make in general. But the more positive sum you are, the more collaborative, the more you expand. And I think that's something that I personally don't think I didn't properly understand positive sum games until I actually like got deep into DeFi and I actually saw firsthand how like the power of collaboration usually outweighs like kind of this siloed zero-sum approach. And, like the thing is, most normal people don't realize that, because I mean, I can relate to that. And as like we have more heads of the crypto hydra grow, there's more flavors that bring you down into the crypto rabbit hole, right? Like let's say the new like hydra I see is like this equity crypto hydra, where it's like you've got Coinbase IPO money, then you're gonna have, I think who's in Paxos just raised a $2.4 billion valuation.
Yeah.
And you've got these like all these OG crypto companies. So like you get your traditional like private equity money funneling through there. You have your artists and like young people coming in through NFTs. So crypto now has like a flavor for each and every kind of person. And when they all come into the rabbit hole, there's now a shared set of principles and beliefs where when you learn how to idealize those, you like become a crypto native, and that's how you start thriving. And part of those like crypto native principles is like open source, positive sum game thinking. And that I think is when you think about that wealth transference, I actually think like when you come to the new paradigm, it works very differently to how you think it works. Because we're actually not going to use like stable coins as a medium of exchange in the future. It's just going to be a barter system. And I mean, one book that I'd recommend for this is The Sovereign Individual. They kind of talk about how there's a world in which we'll be living like this.
Yeah, no, plus one on that. Sovereign Individual, definitely like one of my favorite books.
Indeed, that's cool. So good.
What does it describe?
But I think just on what Kerman was saying, I think that's one of the biggest observations I've had is that everyone you talk to in the crypto space has an inherent win-win mentality instead of this kind of zero-sum, your profit is my loss, and mercantilist approach to to partnerships and to doing business. And I think why I find that super interesting is it kind of it gets towards what Peter Thiel talks about in 0 to 1, which is you don't want to disrupt the pie. Instead, what you want to do is enlarge the market, enlarge the pie, so it's a bigger opportunity set for everyone. And I think that's what all of the composability within DeFi, like two protocols that are composable with each other are greater than the sum of the parts. And that's one of the inherently exciting things about DeFi.
Exactly. It's the DeFi actually isn't decentralized finance. It's more so permissionless finance, where like the APIs are there and you can string them however you want. I think like DeFi is just like a bit of a meme, but what it really enables is those like money Legos to be like assembled in the most craziest ways possible. And like the kind of Lego blocks is like only increasing as time goes along. Now you've got like NFTs as Lego pieces, social tokens, and it's getting really wacky really quickly.
Yeah.
Totally.
Yeah.
That's it's so. And two, can we like dig into a little bit like why is Ethereum, I mean, like, to me Ethereum is DeFi. Is there, I don't know, do you all see a chance of other chains kind of adopting DeFi in to the same extent, or is Ethereum kind of, does it have it locked in kind of, right?
I mean, the way I like to think of this, like, as a high level principle is that like each crypto network, whether it's like a base layer protocol, a DeFi token, a DAO, is that like each crypto network achieves its alpha use case. And once it achieves that alpha use case, there's like no more growth for other use cases. And I think like that's kind of how nature works. Like even as human beings, we have like a purpose in life and we fulfill that purpose, but we can't achieve all the purposes. Like we can't achieve everything there is to do in the world. So similarly, like I think crypto networks, like a lot of them tend to, I think people don't like the idea that like, but this thing won't be everything. And like Bitcoin is a perfect example. The purpose is to be hard money, which is uncensorable and can be used as digital gold. And that's fine. Like that's all it needs to be. Ethereum is basically a high value DeFi boomer chain. Like that's what it will be. And it's okay if it's that. And then like Solana, Binance Smart Chain, Polkadot, they'll all have different communities and different use cases. And that should be celebrated, not really like something that's looked upon negatively, because it goes back to that like zero sum kind of thinking, whereas like positive sum says that like actually if everyone can capture their own piece of the DeFi market, then DeFi as a whole becomes more bigger and therefore everyone wins.
Well, and that's funny, or I mean, I think that's a really great, I like that insight, but I also want to bring back like that point earlier about how the disparity or the divergence from an idealist adoption versus a monetary adoption, and the fact that even if Binance Smart Chain does have its right adopters, even though it's not sort of on the idealistic side of things because it's a very centralized validation system, I guess like that can still be a positive sum. There's a positive sum aspect to that. I guess like then the question more or less is, and probably no one here has a strong idea, but maybe you do. The question then is like, to what extent do those other chains that have maybe smaller communities, but maybe have convenient options survive or die compared to the longevity of like a more idealistic solution, or like what are the advantages there?
I think it just comes down to treasury management and can you stay in the game long enough?
Lindy effect. I think
that's it.
I think the challenge a lot of the other chains face is that they're trying to be all things to all people. So they've said DeFi, like Ethereum has found product market fit with DeFi, and so we're going to go and we're going to try and like get some really cool DeFi projects to come on here as well. Instead, maybe they should take either one of two tactics. They should look at like kind of what is the next thing other than DeFi. NFTs seem to have landed on the Ethereum chain, or like the center of gravity is definitely on Ethereum for NFTs. But maybe the next thing after that could be on a different chain. And then what that will do is it will create a really core, highly engaged group of users. And then maybe you bridge between that chain and Ethereum. And because ultimately what cross-chain or alternative chain solutions need is they need developers building there, they need capital flowing in there, and it's really having interesting projects that attracts both of those. And so just getting people to set up the V2 of themselves on a different chain, like a DeFi project, to do that is not really an effective way of doing that. Instead, you need to kind of find something unique that will get people to, to want to learn to develop on your chain, or people to want to put capital there.
That's interesting.
It's like everybody is trying to copy like the PC built by Apple or something.
Right. But everyone knows where Apple is, sort of. You know what I mean?
Yeah. So like, why would you go to a different chain for it?
And I guess like most of the liquidity today too is essentially a similar user base that's been around for ages, so they know where to continue to park their liquidity and what kind of security measures there are, and who are you ultimately paying? Are you paying ETH miners, or are you paying CZ, or are you paying whoever else, like, Brock Pierce or not, you know what I mean, depending on your chain, right, that you participate in.
Yeah. It is a really interesting problem though, as to like how they how do you approach it? Like, if you're trying to do it, do you go and find the product that can be on your chain first and use that to attract people, or do you really like pump your chain, kind of like BSC, and then use that as a way to then attract people to like come and build on your chain, like pump the token.
Yeah, and all of those strategies are emergent, right? The playbook is being written at the same time, and I think the thing that's strongest to me, the thing that I find to be valuable, is really about the collective mind share that's growing and that compounding in every ecosystem. And I really just don't see an ecosystem that has done, or that just has that spark. It's kind of irreplicable. It doesn't matter your tech. Yeah. Your tech isn't about, that it's about the human capital that you've acquired to literally smash heads together and become obsessed with the tech that you built,
Yeah.
Which is like really, to me, what Vitalik inspired in a way that I think is going to be the hardest to replicate from any other chain.
Yeah, I think that's right. It's the competitive advantage is not so much a technical moat, which everybody thinks. It's really the human capital that's embedded in it. Like, people have invested the time to learn how to code in Solidity. People have, invested the mindshare in getting up to speed with how to use MetaMask and what the different kind of key primitives on DeFi are, and that's really hard to replicate elsewhere. And I think that's kind of the future of DeFi is, protocols that involve more human capital. We are trying to do this with Maple. I've seen other new projects trying to do it, but we have the role of the pool delegate, where they're effectively monetizing expertise, right? And so that's human capital. That's not technical capital.
Yeah, that makes sense. Awesome. Well, yeah. I mean, yeah. What do you guys think? Kerman, can we talk about ArcX for just a moment, just to hear what the how does ArcX work?
Yeah, for sure. So I think we've got like a new kind of release coming out that I can't get too much into details, but I'd love to share like a bit about the thought process around Arc. Basically, it started off a year ago when thinking about like MakerDAO. MakerDAO seems like a borrowing machine on the outset, where you say, I give it some collateral and I get some dollars. But fundamentally, what it is a central bank that issues its own digital native internet currency. And the possibilities of what you can do when you issue your own currency are like, that is such a large design space. And effectively over the past few months, we've been iterating towards essentially creating a new kind of stablecoin that incorporates identity in a way that hasn't really been done before. And I like the full specs are coming out later on, but if there's like one alpha leak I'd love to give, is that like there's a whole new primitive in class of DeFi that's about to explode and be explored. And it's just a matter of when, not if, for that to happen.
Epic. So is that like identity? Is that kind of part of the key there? Just curious. Yeah,
exactly. It's on-chain identity is more valuable than people realize.
I completely understand that. That makes a ton of sense. And yeah, I think that's something that's easily misunderstood or just overlooked by people who are just learning about the space. Is it's all about the finances and things. But really the thing that Bitcoin has done is verified identity. That's the thing that blockchain allows for. It's verified identity and ownership and transactions. That's what a ledger gives you, which is that makes a lot of I like that perspective. I think like it makes a lot of sense that identity is, you feel like identity might be the next thing that really explodes in the space.
Basically, like someone said, anonymous notoriety is going to become really big. Like on-chain nightclubs will be a thing,
right?
Effectively.
Right.
So yeah, we're going into a new direction in the future. It's going to be fun unveiling that.
That's pretty fun. I like that a lot.
So yeah, sorry if that wasn't like super detailed,
exciting.
but
no, I think that's fun.
You.
I'm like imagining people coming into like a door and you scan your wallet and it's just a bit pseudonymous and you're like, I mean, this is my wallet, and then they're just like, oh, you've been a part of like you like held this token for this long and like you're in, and like all of these on-chain metrics. That's on-chain metrics determine or like describe your personal incentives, within the ecosystem. So that's
exactly.
I think, I mean, that's how it's an on-chain description of your behavior. It's which is really powerful. Can't be
exactly. Definitely,
that's cool.
Thank you.
And yeah, and Sid, well, I feel like we're gonna get into a longer episode together on Maple. So, but I don't know. I guess do you want to briefly describe Maple and maybe your take on what you are excited about as far as the future of DeFi?
No, we can certainly cover it off later as well, but just to kind of briefly touch on it here. So I think like the future of finance for me is definitely being built in crypto. And I think that what we believe is that we need to support the builders, the builders of finance and technology, who are in the DeFi space. We support them with access to capital, so that they can build their vision of the future. And so really what Maple is providing is institutional growth capital. So we recognize that crypto native institutions, the crypto native economy is going to be many times larger than it is now. But capital is really intrinsic to reaching that growth potential. And so what we do with Maple is that we provide a decentralized marketplace for them to access that. So we have pools of capital which are provided by investors from DeFi, and then institutions can borrow from these pools of capital. And what's different about them is that each pool has that role I talked about, a delegator who assesses the borrowers and really applies their expertise to further the growth of the protocol. So managing risk and approving the loans. And we try and do this in a decentralized way where we allocate risk and align incentives using the Maple token, which underpins the whole participation in the system.
Epic. I love it. And I think, that's something else that, we could spend a whole hour on, is like token economic design, which I think, or does ARK have a native token as well? It does.
Yep.
For fees or
for governance and future cash flows.
Dope. Okay. Yeah. Great. Yeah. Love that. That's a good. Yes. That's the class. That's the way. That's the classic.
Exactly.
That's good.
Cash is coming, but it's just someday in the future.
Of course. It's like the Uniswap. We have this switch that we can turn on if you all decide.
It's there.
It's
there.
Yeah, that's right. It can't be us.
My God.
But yeah, I think like that's cool. I mean, yeah, I love that. I think like, you know, the future of the economy as a barter system makes a ton of sense to me, and also of like, you know, using token economics in a way that's really robust to create foundational financial systems that provide both security and liquidity and access to you know, anybody who has both the knowledge, which is honestly the hardest thing, but then the internet connection, which is more people have internet than running water, is a quote that I love to like take from Pump or
Was it?
oh
Pump,
no
Pump.
I don't think it was Pump actually. It was another Bitcoiner. He gave a talk at IDEO. But it was a really great talk. But
well, I think I mean,
Antonopoulos.
Oh yeah, of course. Well, I mean, I come back to kind of lessons of history, and I think, you know, hundreds of years back we had like the joint stock moment, which created this huge, you know, explosion of entrepreneurship, and I think that's what's happening in DeFi at the moment, and that's why we've chosen to focus on a capital market so that we can really support the builders of the future, because, you know, this is just a more efficient way to do it. It's more global. You know, it's 10x better than what came before. So they're obviously going to be there. So we want to be there to help them support building their vision.
Absolutely.
Yeah.
It's such an exciting time, and I'm like so excited for the next decade. Like it's just gonna be fun. it's gonna be a crazy decade. That's for sure.
Yeah.
Agreed.
All right, guys.
Well, hey, yeah, thanks for jumping in on this, guys. I really appreciate it. Taking some time out of your Saturday morning, my Friday evening, and you know, looking forward to the next time.
Yeah.
Thank you, James.
Pleasure. Thanks, JD. Thanks, Kerman.
If you want to explore more and deepen your understanding of cryptocurrency concepts and mechanisms available today, please visit our Gitbook or Crypto Encyclopedia. You can find it on our website at square1.tech. Thanks for listening.